video, we are going to be discussing the Federal Reserve's next move in monetary policy and what that means for you and your decision-making process going into the future when it comes to your business, your retirement, your new savings account because you're 18 years old, whatever it is that you happen to have going on in your life. Understanding monetary policy for yourself is absolutely key to understanding everything that you need to do in your world. Now, let's break down what monetary policy really means. Monetary policy is the Federal Reserve adjusting interest rates in the banking system, the short-term interest rates. It doesn't mean they're adjusting mortgage rates. It doesn't mean they're adjusting treasury rates. It doesn't mean they're adjusting all these rates out there in the broader economy. They are adjusting the short-term overnight lending rate between the big banks, and then from that move, it goes off into the broader economy with essentially the same direction in which that they were moving those rates. So if they move them up in the short-term overnight lending, it moves up in the broader economy, and vice versa. If they move them down, then all things being equal, they move down in the broader economy. Okay, so that's short answer for monetary policy when it comes to the Federal Reserve. Everybody kind of understands that, as far as how it's worked in the last 100 years. Anyway, the difference has come now is that they use a lot more deployment of their words. And the reason is because something called the neutral interest rate is very close to the lower bound of zero. Now, this is still the case. Our star has not moved much since prior to COVID. And this is something that I thought was very strange because I've heard so much talk from the other Fed officials out there addressing the idea that the neutral interest rate is now 100 basis points closer to where they are now as far as being in a restrictive level than it was a year ago, which doesn't make sense when you hear other Fed officials talking about how the neutral interest rate hasn't moved much. So they're disagreeing with each other when you think about it in this fashion, but actually they're not. Because they're talking about two different interest rates, but they're essentially talking about the same one. They're talking about one prior to inflation and then one after inflation. And this is why so many people this is why so many people see the disconnect taking place within the Federal Reserve. It's because literally they're talking about almost the same thing, but in two different fashions. And now one of them is essentially R star. Now, R star is the interest rate when the Federal Reserve is neither accommodating nor restricting the economy, running at full potential with low unemployment, low unemployment, and inflation is running low and steady and prices are steady, right? That's the Federal Reserve's neutral rate. That's R star. Now, what we experience in the economy is a whole different thing when it comes to the Federal Reserve and the interest rate setting policy, because now they have to take in an inflationary scenario that's on top of it. So if that inflationary scenario wasn't there, you would see R star. With the inflationary scenario, now the Federal Reserve has to combat that with an elevated interest rate. This is why so many people see it differently. Now, the reason why people like John Williams is very concerned is because essentially he is seeing the inflationary scenario that we are experiencing within the economy as temporary due to the elevated credible threat of tariffs. When you see it in that fashion, like we have all these tariffs and the credible threat of more tariffs and supply chain breakdowns, and nobody knows what the hell is going on with all of this stuff. And so because of that, we have elevated inflation expectations, but that's not everlasting, right? And see, this is where I think a lot of times people will get confused on what it is that's happening out there in the idea of what it is that the Federal Reserve is looking at as far as inflation. They don't see this inflation as being, a forever. It's a tariff is a one-time input or inflation expectation that goes into the prices that we experience. But then unless we have ever increasing amounts of more tariffs going into the future, which it very well could happen, then this is essentially like a one-time shot. Right, a one-time price increase, but where does the continuing price increases come from? Because that's inflation. If the prices get a one-time shot, yes, you get an inflation shot, but if they don't continue upward, then that's not inflation. That'll be stagflation, and eventually it'll turn into deflation if it continues on over time. So if the Federal Reserve is looking long-term in this fashion, it's like, okay, there'll be more inflation beyond the tariff inflation that we are experiencing, because I think that not a lot of people incorporate. You know, they don't see it in this fashion because this is where R star is now coming in. Because if you remove this inflationary scenario and you start bringing that inflation down, where is it that the Federal Reserve is really accommodating or restricting the economy, or restricting the economy is much lower. If you that inflationary scenario, it starts coming down. Well, you start finding where the Federal Reserve is in a position in which that's stimulating the economy. It was never really there to begin with. See, this is what they're trying to prevent. They're trying to prevent this and this outcome from taking place. And that if they could keep the supply chain broken somehow, some way, and keep the elevated inflation expectations going into the future, then they can keep this elevated Fed funds rate and neutral interest rate trying to combat that inflationary scenario also far off the lower bound of zero because the R star hasn't moved. Does that make sense to anybody at all? It might, like, hit the thumbs up button if I make sense, and then I don't know, like, give me a bunch of questions if it don't. This is something that I have been trying to break down and share in an easy way for people. That is probably one of the most complicated things out there. And if you go and try and find articles or anybody discussing this particular manner, it will be crickets out there. There's very few people who discuss this. It's probably the key, most important part of understanding monetary policy that is it is so rarely discussed, and in fact it is ignored. And since most people can't even fathom the idea of what it is, they have a tendency to then start looking at other things as the reasonable indicators of what it is that's taking place with policy. But it's really this neutral interest rate. If you can imagine that the Federal Reserve back in 2019 literally had strategies to try and figure out what it was that they were going to do to create an inflationary scenario. This is, I kid you not, this is coming from Lael Brainerd back in 2019. And it says this: of course, it's not entirely clear how to move underlying trend inflation swiftly to our target on a sustained basis to in the presence of a very flat Phillips curve. One possibility might refer to as opportunistic reflation would be to take advantage of a modest increase in actual inflation, to demonstrate to the public our commitment to our inflation goal on a symmetric basis. Opportunistic inflation. Can you imagine that? Can you imagine trying to go back and ask the Federal Reserve right now? It's just like, hey, did you guys get your opportunistic reflation thing all taken care of? Are you guys still good with that? Or is it still elevated in a way that is now performing to your liking in order to regain your monetary policy, which is essentially moving the neutral interest rate or an attempt to move R star up off that lower bound of zero? It essentially failed, right? It didn't work because now, even though they have elevated inflation and they have their Fed funds rate and they're trying to combat that, and there is a position in which that they can put the Fed funds rate that will neither be accommodating nor restricting the economy along with the inflationary scenario that we are experiencing. That neutral position for the Federal Reserve, what they are looking for, is not the same thing as R star, right? And that's the problem that they were facing, is that this R star is too low to the lower bound of zero. And without the ability to actually fight a downturn in the economy by moving interest rates far enough below that neutral level of R star when you have a deflationary scenario, because you got to imagine, you got to remove all that inflation out of their monetary policy. And once that is gone, R star is really close to the lower bound of zero, and the Fed will not be able to stimulate the economy. They will not be able to drop the interest rates far enough below it. That's why they're so desperate to keep this situation. You will find forever broken supply chain. That is going to be the case, one way or the other. Whether it's credible threat of war, COVID, tariffs, something or other, it's going to be a credible threat of a broken supply chain going into the future. And with that, they can then at least be able to talk about the interest rate adjustment. Yeah. Coming up is going to be a lot of discussion about the Federal Reserve and the Fed funds rate and what it is that the Federal Reserve needs to do. There's going to be so much political talk. There's going to be talk about labor. It's going to be talk about, there's going to be people out there talking about how they're just going to try and make the rich richer by doing this. And there's going to be all kinds of people who talk about all kinds of things that is going on within the Federal Reserve. Very, very few people will be discussing R star or the neutral interest rate. If you could wrap your head around that and look at what it is that the Federal Reserve is now trying to achieve monetary policy, as far as deal with the fact that that R star never really moved much off the lower bound of zero. Keeping the inflation expectation elevated does give them the ability to keep the elevated Fed funds rate, which then gives them the ability to talk about that movement. If they take that back down to zero, it's over. And they won't be able to stimulate the economy with doing that. Yeah. I don't know if that helps. I don't know if that helps people. I'm trying here. I mean, I do my best to try and explain this stuff in a way that then you can like recognize it, see it, incorporate it into your own experience so that you can make those good decisions for yourself. But I don't know if that helps, but this is what I see happening. You know, all the study that I have done going back through literally hundreds of speeches from the Federal Reserve all the way back plus 20 plus years to current speeches just given just recently, everything that I have shared with you seems to be only shared here on the Uneducated Economist. I cannot find evidence of this stuff anywhere. I would love for it to be because I know there's people out there who could probably take this theory, this idea, and break it down so much better than I can. I'm just I mean, I barely graduated high school, I didn't have no college education. I have no business even being in anywhere in this, subculture of economics study or whatever it is that's going on with it. But I don't know why I was given a passion to study this stuff. And as I broke this stuff down and I realized, at least maybe from the working class point of view, that I see things so much differently than anybody else does out there. And I don't get why, because it's the words that are delivered from the Federal Reserve itself that I am sharing with you. Right? I mean, I was just like, I don't know what could anybody else be talking about. I just don't know. It's like this is what they're doing. Yeah, I mean, I don't like people say, "Where do you get this stuff?" And I'm like, from these speeches. It's weird, right? All right, infamous NYC, what up? Thank you for being here. All night hider, useful fiber. All right. They put the wood pulp in foods too. Thankfully, it doesn't take high school or college education to comprehend economics successfully. Man, ain't that the truth all-nighter? I think that's actually where a lot of people end up missing out on studying economics is they just really think it's over their head, but it's not. It's not that. It's like, I mean, in a lot of ways, I guess, depending on how it is that you have incorporated the information into your life and how it is that you have now given it meaning, will then really, maybe give it a very profound impact in the way it is that you have studied that stuff and what it is that you are going to study after that. So, for example, if you have positioned yourself to take it, that whatever political decision is made is going to impact your life, right? Then you're probably going to be following politics, and therefore the decisions that you make will be based on the decision of a political move, right? That's what ends up happening a lot with kind of my thing when it came to like studying politics. When I started studying economics, I started studying it in a different fashion. I had originally looked at it from this like political view, and then as I've studied more and more of it, I was just like, well, this is kind of deeper and longer and out, the stuff that I'm going into, it's like manifesting over time and it's not necessarily involving the politics of it, although politics are symptoms within it, like they are reacting and they're participating. But it's ultimately the underlying economic forces that are playing out, and when you recognize them, it's just like, okay, so now I look at it much differently. It's just like, okay, I take a step back, and it was just like the political moves that I see are very impactful. And don't get me wrong, like, as you continue to print money and you put it in, that's a political move. Okay, great. There's underlying economic forces that are going to result from that, that if you don't understand what those are, you are going to pay the consequences. All right. Yes, it's a political move that they are printing the money and they are dumping it into the system. If you do not understand what happens when new money comes into the system, you are going to suffer the consequences. Because there's underlying economic forces that will definitely play out when that happens. right? And whether they're forcing the money into the system, creating it, or whatever, it doesn't matter. If they had a silver mine that it was this magic silver mine that had ever abundance of silver pouring out of it, it would do the exact same thing. The underlying economic forces would essentially do what we are experiencing with the inequality. It will happen every single time. Ever increasing amounts of money will do this. Yeah. All right, let's get some questions going. I want to answer some questions tonight. Let's break down credible threat theory. What is it that you want me to share with you guys? What do we got going on for more inflation? I mean that are lowering. It's not a question. They are lowering it. It is not a question. It's not. It's yeah, but I think the question behind it is like the reasoning that people give behind the Federal Reserve lowering. People will say, "Oh, they're giving in to Trump." They're, I don't know, like they'll have all this stuff, but ultimately what they are doing is they are trying to have the effective fund rate, which is their like when they say we are setting our interest rate policy at X, right? That that Fed funds rate, that's a target rate. The effective fund rate is the actual overnight lending rate between the big banks. Now, this is set in the repo facility and interest on excess reserves, and this is kind of a complicated thing all on its own. We don't really need to discuss it because we've done that many times. Knowing that they are trying to set this effective fund rate at a level that is neutral with the inflationary scenario. That is very difficult, right? Because people think, okay, they're trying to get inflation down to 2%. That means they need to be restrictive, which they are, right? And then over time, when they get the inflation to 2%, they're going to try and maintain 2%, but they've never once in the history of time have ever been able to ever once maintain a 2% target. Not in the history of their existence, right? In fact, let me see. If it was it up here, let me see if I can find it. There was, where did I find it? I don't know. Maybe I missed it. To keep serious achieving 2% inflation. There was oh gosh, I read so much stuff and I can't find it, but it basically was in that they're going to try and get inflation down to 2% and keep it from falling below 2%. Because the most important thing that they do is like even John Williams has said it in the past. They would much rather have an inflation that is persistently too high than too low. So if it's been falling persistently too low, that's their problem. They would rather it be persistently too high. Like they're trying to get it down to 2%, it keeps falling, bang, and it keeps bouncing off of 2%, but it keeps bouncing up. That's where they would want to be. They want to be persistently above 2%, not persistently below 2%, because never in the history of the Federal Reserve's existence have they ever been able to maintain 2%. They know they can't do it. I don't know. I mean, I wish I would have kept that because it's somewhere in my thing here. I'll find it somewhere in my computer. But that's essentially what they said. They want to get it down to 2% and then make sure they do not fall below that. All right. And that's the important part. They don't mind being slightly above it. Now, with the inflation expectation that is in there, we know that inflation can adjust. Right? We may find it down at 2.3, 2.2, 2.3, 2.8. It thing bounces around all over the place, and then later on we have revised versions of it and all that other stuff. So anyway, we never know what the inflation truly is. But essentially, when the Federal Reserve is trying to be at neutral, they're trying to be at somewhat where that inflation is on top of the R star. So R star is right like somewhere around 0.5%, quarter, three quarters of a percent, and somewhere above, just slightly above zero. And then on top of that, we have an inflation that has taken place, and the Federal Reserve is trying to be slightly restrictive to bring the inflation down to 2% and then be somewhat neutral, which they now say is going to be somewhere around what, 3.25, 2%, whatever, because they know that the inflation itself, once it gets down, like if inflation was able to maintain 2%, then they would be at what, 2.5 on the Fed funds rate. That would make them neutral. Does that kind of make sense? But if you have inflation that is going to be persistently above 2% because you don't want it to be below, so it's going to be bouncing above 2%, whether it's maintained slightly above it or what, just never down below it, then you would have to have the Fed funds rate elevated in order to keep from becoming accommodating. Does this kind of make sense yet? I don't know if I'm doing it right this time for you. But again, to understand if the R star is at a 0.5% and the Fed or in the inflationary scenario is producing a 2% inflation, then the Fed funds rate would have to be at 2.5% in order to be neutral. If that inflation does happen to rise, goes up to 2.2, 2.8, 2 point, whatever, then you would have to have the Fed also adjusting along with it in order to maintain neutral. They know that they want inflation to be moderately above the 2% at times. It would rather be persistently too high than too low. So hitting the 2% target, awesome. And then if they're above it, that's okay. If they're below it, that's not good. All right. So this is the way they're going to see it. Again, 2% is awesome. If they are above it, that's okay. But then if the Fed funds rate is below that number, then they would be accommodating. They don't want to do that. So they are going to maintain their Fed funds rate above the R star plus the inflationary scenario, which should be at least 2% plus some, which may end up being 2.5. 2.7, who knows, which would make them have to have their Fed funds rate at 3.2% on a sustained basis in order to accommodate this inflation bounce off the 2%. Okay, should I do it one more time? Was that enough? I don't know. I think I did it. I think that one did it, right? Did that one do it? Am I the only one who does this? Is there anybody else? Everybody else is all like they got whiteboards and they're all smart and technical and they're just reading off of what AI script gave them or some stupid thing. All right. Let's see here. Yeah, we want Obama 0% rates back to the discussion. No, you really don't. It's all lies. A small group decides what the market does. Conserve your energy for after the crash. Conserve your energy for after the crash. All right. CPI doesn't include food, energy, or any of the other stuff. UE, what up? Yeah, I know. And see, that's the problem. I know it doesn't include all the other stuff. And to me, it's not a matter of them all the stuff that they're supposed to include or what I think they should include or any of the other things. What matters is what it is that I understand about what it is that they are looking at so that I can think about how it is that they are going to conduct monetary policy so that I can relate to it in my own personal way. Knowing that they are not looking at inflation appropriately doesn't really matter because FASB 56 already said that they are not going to give you the appropriate numbers anyway. They're going to give you numbers that are good enough for doing your investments and all the other stuff, but ultimately they're going to be fake for national security reasons. Once they told me that, I was done. I was like, okay, fine. I don't care about your numbers anymore. It doesn't really matter. I'm just going to look at it for the game that it really is. What is your inflation with the R star in your position with the Fed funds rate in order to maintain your monetary policy of being slightly restrictive or neutral in order to conduct yourself in a way that allows you to continue using your words to guide markets into the next rate cut or rate adjustment, I should say. I've said this stuff so many times. There's really nobody who could match me when it comes to discussing what it was that the Federal Reserve was experiencing at the lower bound of zero and how it is that they had set their monetary policy up to achieve a inflation that would then come back to monetary policy in a way that would give them the power that they are now using on you at this moment. I don't know how many times I could explain this stuff. I tried to reword it so that maybe it makes sense the next time, but but again, here it is. I mean, this is Lael Brainerd saying opportunistic reflation. And I love it how if you continue on with this quote, it's pretty cool. She says if there was a surprise shock, right? Let me see, where is it? Let's see, to inflate, and so, for example, suppose that an unexpected increase in core input price inflation drove overall inflation modestly above 2% for a couple of years. Yeah, it was just like, whoa, God, this was, what year was this? This was like 2019. She said this, May of 2019. Suppose, just by happen chance, there was, for example, just saying, not trying to predict the future or anything like that, but suppose there was this unexpected increase in the import prices that drove inflation up modestly for a couple of years. I mean, you can't make this stuff up, right? It was totally what they were wanting. Now, COVID was an extreme and everybody lost their mind. And don't get me wrong, it was a painful experience, but it wasn't like the Federal Reserve was going, oh, God, that worked out so well. Oh, my God, that worked out too good. Yeah, it was like, oh, I'm sorry. How many people got sick? Oh, that's sad. Guys, that makeup strategy that you all had is go ahead and put it back up on the shelf. We don't need that stuff. We got COVID that totally took care of the day for us. High fives. All right, go back to work. Good job, team. How many people see it that way? None, except for the uneducated economist who's been saying it the entire time, right? This is exactly what they were looking for. And now knowing how it is that they are viewing this R star in relation to the inflation is super important to knowing how it is they are planning on setting monetary policy, because all the rest of it is noise. It doesn't matter. They are going for neutral. What do you think inflation is going to be going into the future, into the future in relation with the R star? Think about this for a minute, because it's not just the neutral interest rate. Yes, they are going to be neutral somewhere up around 3% or whatever it is, 2.5 to 3 to 3.2. I don't know where it is that neutral is exactly going to be on the Fed funds setting policy, because we are going to have an inflationary scenario that is going to be persistent going into the future, that we can then set on top of the R star in order to understand where it is that the Federal Reserve wants to be with the Fed funds rate. If they want to stimulate the economy, they have to be below neutral, which means that the Fed funds rate, where they set that monetary policy, you have to think during a stimulating economy is generally because the aggregate prices are falling, right? Consumers falling, everything's falling, the economy's falling, and prices are falling, and that scares the hell out of the Federal Reserve. And they're going to try and stimulate the economy. If that is the case, the inflationary scenario is removed, and R star is the present factor inside of this monetary policy that the Federal Reserve now has to face. Because if the neutral interest rate of R star is just off the lower bound of zero, they will not be able to drop below it. So the Fed doesn't have a stimulating factor to the interest rates. They don't have a stimulating factor when it comes to the interest rate setting policy. They just don't. It's not there. The expectations that come from the markets and how it is that they conduct themselves is the market, is the monetary policy. You think about it, the people themselves are no longer, this speech is actually talking about how it is that the working class individual is no longer part of the economy. And this was back in 2019. She doesn't necessarily say it in so many words, but it was basically calling it out for today and saying that the Phillips curve is essentially flat. And now what that means is that it doesn't matter how many people go to work, it's not going to produce an inflationary scenario. And that scares the hell out of the Fed, because that's what they used to use to try and produce inflation, was the people going to work. When a lot of people went to work, that pushed up on price inflation, and that's where the Federal Reserve found their monetary policy. If they could get more people working was pushing up on the inflation, and they were able to achieve their return of economic activity, and then they would tighten that up by raising the interest rates and slowing it all down again. But now it doesn't work like that. It says here, let me see if I can find it. There's, sorry, I don't mean to just go silent on you guys. This is what economists mean when they say that. Okay, here we go. Let me see if I can get this. Let's see. Since the Great Recession, there have been several changes to macroeconomics relationship, which I refer to as the new normal. Now is a good time to assess the characteristics of the new normal and what they mean for monetary policy. The emerging contours of today's new normal are defined by low sensitivity of inflation to changes in the labor market slack, a long-term neutral rate of interest, and a low underlying trend of inflation. Let me each in turn. In today's new normal, price inflation has not moved up consistently with the labor market as the labor market has strengthened considerably over the course of the long expansion. Now, this is again at the end of the first Trump administration. After the Obama administration, the end of the Obama administration, all the way through the first Trump administration, we had historically low unemployment and it did not produce the inflationary scenario. This is what she's talking about 2019. Think about it. In today's new normal, price inflation has not moved up consistently as the labor market has strengthened considerably over the course of the over the long expansion. That was their problem. This is what economists mean when they say the Phillips curve is very flat. Historical relationship between resource slack and price inflation appears to have broken down. That's like crap. The working class individual, sorry to say, you're no longer important to us. That's another way of them saying this. I don't know how many people can hear that, but that's what they're saying. I hope people can hear that. This is super important to understand. That they looked at the working class individual as the key component to the economy. They lower interest rates, corporations go hire a bunch of people, those people go into work, went out there and started spending their money. By spending their money, they drove the price inflation. They found that by the end of 2019, that had broken down. Working class individual, it was nice knowing you. Does anybody else hear that? Hit the thumbs up if that's what you're hearing too. If that's what you heard, Lael Brainerd, isn't this Lael? Let me make sure it's Lael Brainerd. Got on. Yeah, Lael Brainerd. Jeez, I'm accusing the wrong person or something. If that's what you heard Lael Brainerd say too, go ahead and hit the thumbs up button, right? Because that's exactly what has happened here. We are now sitting in a position in which that the working class, average everyday working class individual is no longer participating in the aggregate demand of consumption that drives the inflation. That has not been here since prior to 2019. Like it's over for us. And I don't know, there's no returning. There's like the longer this goes on, there's like literally nothing that they can do to make it any better for us because the problem's only gotten worse since. You guys like I don't know how many other people are going to see it this way or talk about it this way, but this is how it's going down. There's no fixing this. That's why that's why I like sharing it with you guys regularly and share how it is that you can then see it for yourself because there's no fixing this, right? There's no way that you can take this and say, okay, well, let's rearrange it and do some creative financing that's not going to make this happen. That's like, it doesn't work like that at all. All right. I'm kind of rambling on. Let's get some questions going here. Let me cruise it down to the bottom. I have like the wrong glasses. Let me see if these ones work better. Yeah, there we go. Fire movement removes money actually since they no longer need the work for money. Makes it simple. All right, that means the economy has no real basis. Fire movement makes everything about money, life. Okay. K-shaped economy, absolutely is K-shaped economy. But it's not just like a K-shaped economy like it wasn't going to happen or that it's new or this is some sort of like experiment like here maybe if we can design a K-shaped economy. No, that's not the way it is. This is the Cantillon effect in full swing, right? Once you recognize it as the Cantillon effect, then it makes a whole lot more sense that it's because of the new money and the dive into luxuries and the people's rising of the standard of living. You raise that standard of living, and then what you're going to do is you're going to start importing more foreign production and export all your domestic manufacturers, and then you're going to have this major inequality. And this is what we're experiencing. I mean, I've said it a lot of times on this channel, and people say I repeat myself over and over again, but really there's only one way that it goes down. There's only one accurate way that it's actually going down. Most people make it up in a political mindset. There is going to be war and famine and depression and hate and fear and wealth transfer and abundance and all the other stuff that happens all at the same time. And I guarantee you people are going to blame one thing and the other, but very few people are going to recognize it for an underlying economic force. because no matter what you do or how you do it, whether it's political or natural, if you have ever increasing amounts of new money that comes in, you are going to have these sort of events. And the longer you do it, the crazier it becomes, right? The more wild people behave, the more concentrated it happens, the more, the more like poverty and disassociation starts to happen and stuff. It's just like it's so sad to see it, but it's just like, well, it's also part of it. It's like, what are you gonna do? Can't stop it. Alrighty, guys. You guys having fun? The working class person no longer has expendable income to help inflation go up. Well, that's it, Salty Farmer, and to understand why that's the case, right? It's because when we were like a manufacturing powerhouse in this nation, all our jobs were essentially producing things that we sold out there to the world, and the world sent us their money, and then we took that money and we raised our standard of living. That was how it is that like the average job could do it. A factory job was producing things that sold out there to the world. We were the manufacturer of the world's greatest stuff. Now, when that manufacturing job started moving overseas, and people say, well, that was a political move, it's not. Right? We have to understand that's a Cantillon effect taking place because we've recognized that many times by reading the Cantillon essay from hundreds of years ago that describes exactly how that is going to take place. And that's what occurs every single time you have an abundance of money that pours in from that expansion of trade that you have done. If you raise your standard of living, you are going to consume the products of the world. That's all there is to it. And as that starts to happen, you start to export all your money, and eventually you will fall into poverty and decline. Now, if you figure out a way that you can have an ever increasing amounts of new money that constantly pours into the system, think about how it is that that's going to eventually separate the rich from the poor in the most profound of ways. And now, knowing that to be the case, it makes a lot more sense. It says, where did our manufacturing job go? That then gives us the ability to have that high standard of living. It's over there overseas somewhere, producing the stuff that the people are buying. And we're essentially just selling that stuff to each other and to them to hopefully scrap enough to maintain our existence. And that's the unfortunate consequence of being in a consuming nation, a debtor consumer nation, as opposed to a producing saving nation. If we were a producing saving nation, totally different. Like if we were a producing saving nation, you would hear me say so many things that are different. You would hear me talking about like advocating for the gold standard. You would hear me talking about like government. You'd hear me talking a lot more about government limitations and stuff like that, because they simply like it would be a lot more important on what it is that they are doing with the money, because it would actually be money that they would be dealing with, so the politics would actually matter. But now they can just make as much money as they want, so it doesn't really matter anymore, especially when you can just promise to give people like, never mind. It's not important. But you would hear me talk much differently if we were a manufacturing powerhouse. It would be so much different, right? But we're not. We're not. That's not us, and we're not going to be. We're not going to change that around. I don't care if you try and force that. Like I was looking at a video earlier about how, like, somehow Donald Trump has forced the inflationary scenario, and knowing that it wasn't going to create this return to manufacturing. And I'm like, that's a bunch of garbage. But I did the exact same thing, just not in so many words, right? I mean, what was it that he was doing? Like, I'm sorry, guys. I shouldn't really pick on him because I didn't really listen, so I don't really know. But wasn't there some kind of like investment into like, I don't know, something during COVID? It was a whole bunch of money that was going to go and bring manufacturing of some kind of like computer chips or something. Like, I don't know what the hell it was, but I don't think it worked. And I didn't think it was going to work then. In fact, whatever I read about it, I was like, this is bullshit. It ain't going to work. And I just said it right then. Right? And I didn't even read any of the details on it because I'm thinking that's directly against the economic forces that are underlying that will prevent it from occurring. And then now here it is. I don't think it really worked, did it? I mean, I don't know. I should probably look it up before I talk down about it. Maybe it did work. I don't think it worked, right? Didn't like a lot of these factories get like started but never like completed and actually shut down because it's just like right now it's like not even profitable to even try and complete it. And that's the malinvestments that take place like that. It's because it's not profit is meant to do it, not force. All right. Force doesn't work. I mean, it'll work for a little while, but eventually it's just like, people get tired of being pushed around. And, even inside of something like that, when the economy is just like saying, hey, we kind of run on profit. And they're like, well, this is for national security reasons. And we have to spend all this money that we can't afford into it so that we can keep our things going. I'm sure that'll create a wonderful product because it's not doing it for profit, and it was just like, that doesn't make sense, right? The only thing that makes sense is people doing it for profit. That makes sense. Right? Because capitalism is the best way to bring the most efficient products at the cheapest price, the quickest way to the people. Like there is no better way than capitalism. And of course, there's another way of describing it as saying you can take natural resources and turn it to garbage as fast as possible. So here, take whatever side you want on that. I don't care. But I know the fact of the matter is. Right? If you don't have production, if you do not have savings in a nation, you're not going to have a strong middle class. That's it. If you do not have production and you do not have savings, you will not have a strong middle class. It can't. And there's nothing you can do about it at this point because nobody wants to lower their standard of living to try and bring the manufacturers back. People say, well, the rich should pay. They're not going to. There's no way in the world. Nothing is going to happen that's going to go down that road. Don't even expect it. The only way that it can actually happen is for you to lower your standard of living so you can compete against somebody who's sleeping on the ground. Good luck. Right? It's better that you become the asset holder because being an asset holder at least means that you can compete against the idea that the wedge is getting driven ever increasingly deeper. If you're at least in assets and you're working at the same time and you're trying to accumulate all this stuff in your life, that'll then put you in a position in which that you can have a secure rate of interest beyond that of your occupation. You might have an ability to actually compete against what it is that's happening out there, which is sinking into the abyss, right? Like I don't know how else to say it. It's like, sink or swim. I don't know, man. I don't like the idea. I'm scared for my kids, really. Like, I mean, I worry about them the most. But I also think, well, as long as you're listening and paying attention, they should be able to position themselves, because everybody can do it no matter what. If you are paying attention and, you don't have a whole lot of bad luck in your life. You guys having fun? Keep hitting that like button if you're having fun. We are 42 minutes into it. We'll call it at an hour, unless you get it up to 100. You get it up to 100 likes, and we'll stick around a little longer, but otherwise we'll quit at an hour. Fire. You guys are talking to fire. Fire independence, retire early, or financial independence, retire early. Nothing wrong with financial independence and retiring early. Then the average is not bad either. Doesn't mean one is not providing value any longer. Oh, absolutely. No, I totally agree, all-nighter. There is like that's the position in which that I want to go. Like I mean, people I call it a money machine. Right? I call it a money machine. To be able to put together a portfolio of assets that sits there and spits out money. Dividends, rental income, businesses, like whatever it is that I got out there, some sort of portfolio that I could put together, some sort of wealth, some sort of possessions that I could put together that spits out money. I don't know, I don't know how many people think about it like that. If you can figure out a way that you can put something together that spits out $1, right? Dividend stocks or whatever, you buy enough dividend stocks that when it pays out quarterly or whatever, it's enough that it pays you $1 every day, and then you start adding to that and you start building that up or something of that nature so that you get into the mindset that you're getting $1 paid to you every single day one way or the other because of this machine that you have put together, and then you double that to 2, and then you make it 4, and then you make it 8. You see where I'm getting at, guys? You make yourself the money machine, and this is where like most people who are the fire, live in the financially free independence, whatever you want to call it. This is essentially what they have done, right? They have built a portfolio of stocks, bonds, businesses, RETs, or real estate investment trust or rental properties or something. You know what I'm getting at? And in my mind, like if I was to have just the simplest of goals, what would that be? It would be to have a money machine that spits out enough money that I could take half of it and use it for my living expenses and put the other half back into pushing out more money machine, more making more money, right? Putting it back into the buy more into the portfolio. Like that's my mindset. That's what I would love to hand off to my kids someday is that money machine with the ability for them to understand what it is and how to deal with it and change it around and make use of it so that it doesn't just disappear. Um, I think work is being no more important than someone who can't retire at 40. I want to work as long as the less fortunate. Guys, I like going to my job. I really do. It's retail, and people are like, dude, how can you work retail? It's just like retail at a lumberyard. It's a lot of fun, right? I mean, it's like sometimes I work on some big projects for people. They're doing like a lot of stuff, and so you're, doing this project that takes weeks to get through, and once it's completed, it's like, wow, man, that was a lot of fun actually. Going through and making it all happen and watching the progress of it. It's almost like gives me the ability to like kind of live somewhat vicariously through it because I used to be in that industry of building that stuff together. So to me, like being in the supply industry, I enjoy it. Like I like the idea of it. Sometimes it sucks, you're doing retail, which is boring. Ding, ding, next, you're just wringing out the screws and next, wringing out the boards, wringing out the paint, whatever. But a lot of times it's a lot of fun sharing ideas and what it is that, customers can do. So for me, working, I like it. I don't know what else I would do with my day. It's like, what else would you do? I'd be sitting here just studying monetary policy and coming up with videos all the time. It's like it gives me a break from all that stuff so I can go to work and actually do some lumber sales or something like that. I enjoy working too. And I probably will always work. I mean, why not? It's a good job. So far, it's paying me insurance. It's matching on 401k contributions. It's like, I get a employee discount for there. It's like vacation pay. Why wouldn't you do all this stuff, right? And the more you work in a day job, not that I'm planning on getting it, but the idea that there is a social security benefit that could come from that at the very end of it, it's just like, wow, man, like all this stuff that people talk down about, working a W-2. I don't see it. Like, I don't see it that way. It was just like you should be working a day job for somebody else for some stability that comes from it. You should be working businesses, like trying to start your business or work a business. And now, if that business is so successful, yeah, you don't need to work for somebody else. But, working a business, working side hustles, doing whatever, all these things combined, this is what gives you the ability to then put you in that position that you can start building that portfolio, building up that wealth that will eventually, hopefully, give you something at the end of your life. And I'm not trying to say that I'm going to be over on the other side of the wedge by the time I'm done, but if I can keep my living expenses really low and I keep moving in the direction that I'm moving, I might actually be able to have a little something at the end of this, which would be quite nice, and something that I never thought that I would ever have before. So I just keep it low. Like people, it's kind of funny. I said it before in the past. If you do not have a plan for your money, the universe will come and take it from you, right? And it's the weirdest thing how it does it, right? You will like save up all this money, you will have it in the bank, you will have the savings account, and then all of a sudden, like car problems will come up. There will be some issue that you're facing that you have to now dump a bunch of money into. And you think about it, it was just like, man, I saved up all this money, but I lost it to these emergency cases or these unknown expenses that were just all of a sudden just popped up. If you get rid of the money right away, then you still face those things, but they're not in the same way, right? They're like you still face them, you have to deal with them, but you deal with them in one way or the other, you'll get through it. But if you have the money sitting there waiting to deal with that problem, that it'll come and take it away. So now my like literally every single month, I pretty much am like I'm broke, right? I put it all into particular positions, and at the end of it, I don't really have any spending money, and I'm like, damn it, I did it again. I gotta wait till payday to get some money so I can put some fuel in the Suburban. Like that's how I've lived. That's how I'm living my life. I live it like I am broke as hell, and because that's my natural living experience anyway. So I don't see why I would want to change that. And by living that way, I go and I look at some of the things that I have done over the last few years, essentially the last 5 years, because that's really when the YouTube started taking off, was about 6 years ago, really 6 years ago. What I've done since then has just been absolutely phenomenal, right? I mean, it's just, I think about where it was that I was at in life at 40 years old, and I thought, man, there is no way that I'm going to have anything. This sucks, right? Because by the time you get to 40, you're pretty much that's it. Like you're pretty much set. Like, you're set in your ways, you're set in your thinking, you're set in your life. If you have been making it, then you're probably going to continue to make it, and if you were sucking, you're probably going to continue to be sucking it. And that's essentially, what I kind of come to the understanding was just like, man, I'm broke. I don't have anything. I'm in debt. I don't like, yeah, then life is fun. And then I'm like, well, no, you hear people all the time. They turn it all around in just a matter of years or whatever. And I'm like, oh, you know what? I'm gonna give up drinking. Let's try this out. So that's what I did. And next thing I know, I'm starting to put my life together in a way that's just like, wow, man, I wish I hadn't drank in the beginning. But then again, you have to go through life lessons in order to know what it is that you need to be doing in your world, right? You need to go through punishment sometimes in order to get the experience you need to make sure that you're doing it right. Because like you know how to screw it up. You know what you're doing when you screwed it up. So don't do that. Uh, we got 9 more minutes. If you guys want to continue on, get 25, 27 more likes, and we'll kick it off for another, half hour or so. Otherwise, we'll call it at the hour. Is it to fulfill the purpose that you were put on this earth for? What does that say? The point of life isn't work and making a bunch of money to retire at 40. You are walking the walk you eat, a true, real one. Is it fulfill the purpose that you were put on this earth for? And this is really where I believe that I do feel that this is my I got this Yeti cup that keeps on the fall right here. I'm gonna put it in there. Fine, you're gonna sit down there. When it comes to like following your passion and stuff, I always had an interest in economics. Now, I didn't know necessarily what it was that I was interested in when it came to economics, but I knew that I was into like money, into like how the flow of money kind of worked, but I was into like I'd always pull the wheat pennies and I always called it the funny money, the odd currencies or silver coins and stuff. I'd always pull that stuff out of my change, and I never really like understood why it is that I had this kind of draw for it. And then as time went on and I started breaking stuff down and started doing the research, I started realizing, man, I really, really like this stuff, and I don't get why, because it's probably the most boring topic in the entire world to discuss. Like, I just don't get why it is that I got into this. Like, there is no reason for it whatsoever. Like, none. Like, I don't come from a family that were bankers or into stock, is like stock trading or anything, like none of that stuff. And just regular, normal, everyday, average people, not anything like that at all. And so to be like even in the idea of studying this stuff just completely out of curiosity on my own, that's literally what drove me. And all the study, everything that I have ever done, I've done from my own research. I've never taken a class. I've never had like anybody like teach me anything. I've hardly even read any books on the matter. Like I have read a few books, but for the most part, it's always been reading documents and pages and going through literature that was produced by the Federal Reserve, or in a lot of ways, like say the economists, like the Cantillon, Richard Cantillon, or some of this, like not necessarily like the deep works or studies of Triffin, like from like Triffin's dilemma or Gresham's law, but I've done enough like study of it to understand how the forces and the theories work. in order to apply them to, into my life now. Understanding the Cantillon essay, that to me, I think is probably the most important one, and not just because of like, I'm just partial to Cantillon because I've read it or whatever. It's because it's the oldest. Right? It's like one of the old, in fact, I believe it's the oldest essay of its kind that actually was hidden and circulated in somewhat of a secrecy for a while. If you kind of read up on it. Um, so to me, like going back to the furthest and getting the words of the people who could say it earliest, and then understand that that is the economic force that they are describing, that you can see them play out, that people complicate over time, and they add all kinds of issues and politics and whatever technologies to it, and that it makes it different in the way that they are viewing it from the original, you know essentially primitive way of understanding the economic force. And now we have all this new aged concepts that are brought into it. It's still the same economic force, it's just playing out differently, and we have to recognize it as that. So again, the further you go back, I mean, ultimately you should go back and study it in the Bible and see it back in there, because that's essentially the older document that you would find on these sort of matters. And as I've studied many things, like I'm not religious at all. Like I never went to church. Well, I went to church a few times, but I didn't go to church like regularly. And I didn't study or learn the stories of the Bible, and I don't know anything about any of that stuff, right? And so my wife, who is on the other hand incredibly well understanding of the Bible and gone to church a lot, and she knows a lot of these stories, and she studies it, even listens to it even today. I'll find her and they're listening to some of the old stories, and I ask her, I'm like, what are you listening to? She goes, hey, I like them, I remember them from whenever. And so she still likes to listen to that stuff even today. Now when I ask her questions about certain things about the Bible, I start to understand it in a way that is different than what I had originally conceptualized when somebody was telling these stories, because of my understanding of the economics of it. And the main one really, and a lot of people laugh when I talk about this one, but it's Sodom and Gomorrah, right? Because these were two cities that were essentially had turned on their fellow man, right? They were like this massive, massive, massive luxury, and then this pitiful poverty that was taking place at the same time. And so there was essentially these two major class separations that were happening. And to understand why it was taking place like that. And I was just like, well, where were these two cities? I bet you anything they were port cities. I bet you anything that they were sitting somewhere along a trade route, and they had a lot of trade that was running through them. In fact, it was probably like a trading hub, so they didn't even have to produce anything. Is this stuff came in and left through those particular hubs in order to get out there to the rest of the world, or come in from the rest of the world, however I guess you looked at it. And because of that, you had a massive amounts of abundance of money that came in there. And this is the reason why you had these stories of like, being all like separated by the rich and the poor. I bet you anything it was because of these port cities. Then later on, you kind of do some study on the area, and like, who knows exactly where it was. Like, I mean, I guess some people probably think maybe they do, I don't know exactly where they were. But from what I was gathering and what Sarah was telling me from this, is that this particular region had a building material that used a lot of bitumen, right? And I don't know if you're familiar with bitumen, but it's like basically it's like a asphalt type of product. And whether you're using it for waterproofing or something, I don't know exactly what it was that they had, but they were using a lot of this particular product. So anyway, super flammable, can go up in in an instant. And then if you think, okay, if you happen to have some natural disaster that created an environment of bringing down this fire, hailstone, like all this brimstone and fire and hail or whatever it is, right? If it was like, say, a comet or a meteor or something that exploded, right, which isn't unheard of and it's happened before, and if it did happen to take place over these particular cities, and then just cast down all this, burning fire, meteor, comet thing or whatever is coming down, and it starts setting the city on fire, but it sets the city on fire in a big time way because everything is made of this flammable material. Can you imagine what it would be like to try and run away from this? It wouldn't. You couldn't run away from it. It would happen almost instantaneously, and it would burn everything up, right? So all these stories that I kind of hear about that, I think to myself, man, I almost wonder if this wasn't like that. Like, yeah, sure. I totally get the idea that, God came down and destroyed it because there were a bunch of, sinners down there and not paying attention to what they should have been doing with their fellow man. But then it could also have come as a result of a natural disaster from the way that they had actually built those buildings down there and having this happen to an area that was full of people because of the massive trade route that might have been taking place during those times. This is what I end up like. This is how I look back at it, right? All for me, everything is an economic event, no matter how you look at it. Yeah, everything is. Economics is the mechanical form of consciousness, right? It's the mechanical form of consciousness. There wasn't like, it's weird to think that, it's almost weird to think like the bottle of water wouldn't have made it here if it wasn't for the things that everybody had done in conjunction exactly the way they did it. Because any one component that had moved differently at any given time might have changed what it is that's showing up here. It might have changed the color of it. It might have changed the shape of the bottle. It might have changed everything about it. It might have changed what even the contents of what was in it. And every single person has a simple little experience within it at any given moment that then changes the outcome of everything in the entire. I think about the dude who sat there one day and says, dude, you got to check out George Gammon, right? On a video. I fired up my video, read the comments, says, yeah, check out George Gammon. Huh. Well, who's George Gammon? Next thing I know, my entire life changed. All right. It's because everything, like if it wasn't for all the physical things that we have going on in our life that we have interacted with in some way or another to bring to our our reality, our vision, our view. I mean, I don't know how else to describe it. It was every single one of us had a part in doing that. The fact that you're watching this video right now, as opposed to watching somebody else's video, means that your outcome is going to be different. It's a different parallel that you are going to experience because of it. Yeah. Now, is it going to be a profound difference? I don't know. Mine was the day that dude typed in, you ought to watch George Gammon, or you ought to check out George Gammon. Right? Before he was had like 300 subscribers or something like that. I don't even remember. He had almost, he was really fairly like, small on YouTube. He was maybe out for a year or two. I gave him a shout out. He got a bunch of attention from it from my viewers, which I couldn't thank him enough for because it absolutely changed my experience, my whole world. All right, you guys are awesome. We got 77 likes with 88 people watching. I appreciate everybody joining in on tonight's live stream where we break down monetary policy, talking about economics and all the wonderful things that you can do in order to get the most and best experience out of this world that you can, knowing that there is underlying economic forces playing out that you can then recognize so that you can then make those most and best appreciated decisions. Okay, you guys know what I'm trying to say here. I'm losing my ability to speak. What does it say here? Kirk, you're judging everyone in the FIRE movement. Wow, you guys are still talking about the FIRE movement? The pursuit of women brings sorrow, purses for greatness. That's got to be old. You guys cannot be still talking about that, are you? Alright. Yeah, I guess you are. I don't know. Okay, so here's the thing. The FIRE movement, I'm going to give it this one last bit. Right? Cantillon talked about it. There's two people who live independently of the state. Property owners and capitalists. The capitalists are the people who live off of investing into the system. Right? Those people who have taken their money, put it into the system, and get a return off of it, they live independently. The other people who live independently are the property owners. That's it. Everybody else has to work. If you are working in the United States, you better have a really high-paying job or live in a easy, best low standard of living, or not necessarily low standard of living, low cost of living. There we go. You can have a high standard of living, but in a low cost, right? Low cost of living area. If you are not experiencing that in your life, then you're probably going to have something that is very difficult to operate in. Right? And that's it. That's all there is. That's all there is, because that's all there ever has been. There's no other way. We can like it to say, no, there was a way back when my grandfather was working at the factory, but we don't have the factory anymore because we've moved beyond that. The cycle has now progressed beyond. uh, let's see here. Yes, because they can't admit they love money. What is this? Let me read some of these comments, and then I'm going to call it quits, guys. I have wrong glasses. All right. Oh, what does it say here? I have enough money if I wanted to attire. I could, but I have a family. I want to retire. Uh, yeah, I'm not even close. Yeah, I'm not even close. Like, I'm not even close. So, but that's okay. I mean, I screwed up enough in life that, it's just like, as far as the idea of the fire movement for me, it's just like, that's like, I mean, I guess it's still a possibility. I don't really count on it. I don't really think about it much. Um, Even though it's like, I guess it's a possibility if I was to really push for it and wanted it, but that's not, I don't know if that's necessarily like something that I'm like wanting to push for. See, the thing that really got this channel to grow the most was when I didn't really care about one way or the other what was happening. The videos that I put out, I didn't care if they got attention. I didn't know what would come from it. I didn't really care what happened. I mean, it was like, I mean, I cared, but I didn't have any expectations of it. And because of that, it was like, that really fed into the energy of the views or the viewers and what it was that they were getting from the channel. And as I started to grow and share the lumber information, and that was getting really popular out there, and the money started to come in from that, it really kind of overwhelmed me. Like, I didn't know what the hell was going on. It came quite sudden, and I thought, holy moly, what is this? And so I knew right away that I was probably not going to know what to do with it very well. Like I could just see it. It was just like, man, you have screwed up all the money in your past. What makes you think that you can do it now? So immediately I paid off all the debts. Like, every debt that I could find, I made sure that there was no debts left to mess with. I paid off all the debts. And once I paid off all the debts, everything started getting a lot clearer on what it is that I needed to do. And so that's really like the path that I try to share with people all the time, is that for me anyway, it was giving up alcohol for two reasons. One, it was super expensive to do it, to drink. And the other one, you can't really do anything in an alcohol-based consciousness. You really have to like get in a clear mind in order to focus in on what it is that you need to do with your world. And so because of that, it was expensive and I wasn't focusing in very well. When you give up alcohol, now you can focus and you actually have a little bit of money because you're not drinking it all away. Use that money to pay off debt. If you don't have any idea on what you got to do, pay off the debt. And as you start to clear up and sober up, and you're getting, starting to get back into a sober consciousness as opposed to an alcohol based consciousness, you'll start to understand what it is that is driving you to do what it is that you were doing, right? To pay off that debt. Once you have paid the debt off, you're going to find positions to put that money. You're going to think about ideas of businesses to start. The tricky part right here is that most people end up stumbling at that point, and they start buying into luxurious experiences, and then they will eventually find a spot where they are bummed or depressed, and then they'll slip back into the stimulants or alcohol or whatever, all that. Alrighty, guys, this was fun. I'm gonna call it quits. We got 85 people who have hit the like button, 75 people who are watching at this point. Thank you so much for joining in on today's live stream, where we are breaking down everything monetary policies so that you can understand what it is that you need to do. You guys are always so supportive of the channel. I can never thank you enough for everything you have ever done. Be sure and join us on the Patreon channel for those of you who are wanting to get a deeper dive into a lot of this information, especially the stuff that comes from the Federal Reserve speeches. I'm going to be breaking down this speech from Lael Brainerd. I will be doing that on Patreon. Oh, let's see. I got to go to town tomorrow. Um, I'll probably do it at some point tomorrow afternoon. And it shouldn't take very long. It's probably only going to be maybe an hour or so in order to get through the speech and talk about it. But there's other speeches that we have broken down. And again, these are speeches that I have done already here on the channel. I've done them on the members only version of this channel. But going back over these speeches again with an updated understanding of what it is that we are experiencing today, and then relate it back to what it is that they were facing back, here it is. This is almost 6 years ago now, 7 years ago going on. By going back and looking at these speeches, we can get a better understanding of the decision making that they were doing and that led us to this point, right? That led us to where we are today. And I think that's really important because now we can go back and reflect upon the decision making that they were doing. Most of the time, people thinking they're doing snap judgments here, but when we look back and they say, hey, we had a plan, and now we see that plan has come into fruition. It's like, man, yeah, they're not making snap judgments. This thing is old. This is ancient idea strategy that's happening here. And so we're breaking these things down on Patreon. So I really appreciate anybody who has come over to the Patreon channel and joined us over there. So thank you Thank you for becoming a member here on this one. Again, these are like $1 a month. These aren't expensive, guys. Like there's like, I think the Patreon members at anything you want. So if you want to send me $100 a month, that's cool. But if you want to do it at $1 a month, yep, that's cool too. Same with the membership only here on YouTube. These are very cheap memberships. I'm not trying to make a ton of money off of it. I'm trying to bring to the attention of the people who are truly wanting this information, a more focused way of looking at this stuff through a community and a group that is going to have a clear understanding and discussion of the topic without, going off topic and talking about things that aren't really related to what it is that we're discussing. So anyway, thank you guys for joining in. Uneducated Economist, you guys let me know.